In the world of artificial intelligence, established giants like Palantir Technologies dominate the landscape. But now, BigBear.ai has entered the scene, raising a critical question. Can this ambitious newcomer truly challenge Palantir's might? Or is it just another fleeting hype? It's a classic David versus Goliath story, set against the backdrop of the AI revolution. BigBear.ai seeks to carve out its own space in a market where Palantir has already built a fortress. For investors, this is both a tantalizing opportunity and a significant risk. To understand BigBear.ai's true potential, we'll compare its technology, financials, and leadership directly with Palantir's established track record. The journey to uncover whether BigBear.ai is a genuine disruptor or simply riding the AI wave begins now. BigBear.ai didn't just appear, it exploded onto the investment radar in early 2023, catching many by surprise. Practically overnight, this once obscure company became the talk of Wall Street as investors scrambled to understand what was driving its meteoric rise. The surge was fueled by the market's insatiable hunger for anything related to artificial intelligence. As AI stocks soared, traders and analysts alike were eager to find the next breakout star in the sector. The viral adoption of technologies like ChatGPT ignited a gold rush for the next big AI winner. BigBear.ai, with its focus on AI-powered decision intelligence, was suddenly in the spotlight, seen as a potential leader in this rapidly evolving field. At its core, BigBear.ai provides advanced data analytics and AI solutions, primarily serving the U.S. government, especially in defense and intelligence sectors, where the stakes are incredibly high and the need for reliable insights is paramount. Their platforms are designed to transform massive, complex datasets into actionable insights, helping organizations make critical decisions faster and with greater confidence. In high-stakes environments, this capability is not just valuable, it's essential. Despite its newfound fame, BigBear.ai's public profile is still relatively new. The company went public via SPAC's merger in late 2021, a move that brought both fresh capital and a wave of volatility, along with skepticism from some investors. But the recent AI boom has transformed BigBear.ai from a little-known government contractor into one of the most hotly debated stocks on the market, sparking intense discussions among analysts, traders, and retail investors alike. Now, with its valuation soaring, investors are forced to look past the hype and dig deep into the company's fundamentals. The big question, does BigBear.ai have the substance to justify its sudden rise? As the excitement settles, the real test begins. Is there genuine value and staying power behind BigBear.ai's sudden fame, or is it just another fleeting market sensation? The buzz around BigBear.ai is driven by several key factors. Most notably, its partnership with Palantir Technologies for a U.S. Army program validated BigBear.ai's technology and elevated its profile. As a pure-play AI company, BigBear.ai is a magnet for investors seeking exposure to the sector's growth. Its focus on defense and intelligence, with stable government contracts, adds to its appeal. The company is also expanding into commercial markets like logistics and energy, broadening its potential. Every new contract win fuels optimism that BigBear.ai's strategy is working. However, the speculative nature of the stock means its valuation can quickly become disconnected from reality. Social media hype and FOMO have amplified the excitement and the risk. The question remains, can BigBear.ai's business fundamentals catch up to investor enthusiasm? Hype aside, BigBear.ai's financials tell a more sobering story. Revenue growth has been slow, a red flag for a supposed high-growth disruptor. The company remains unprofitable, with ongoing net losses and unclear path to profitability. Much of its revenue comes from a few large government contracts, creating concentration risk. Losing a single contract could significantly impact results. In contrast, Palantir has achieved profitability and boasts a more diversified customer base. Investors are betting on BigBear.ai's future growth, but the current numbers don't justify the hype. The disconnect between valuation and performance is a classic sign of speculation. BigBear.ai must prove it can scale and diversify to justify investor optimism. Leadership stability is crucial, and here, BigBear.ai has struggled. The company has seen multiple CEO changes in a short time, raising concerns about its long-term vision. Frequent turnover disrupts strategy and can unsettle customers and partners, especially with government contracts at stake. In contrast, Palantir's Alex Karp has provided steady leadership for 2 decades, guiding the company's evolution. BigBear.ai's new CEO, Mandy Long, faces the challenge of stabilizing the company and building investor confidence. Her success will depend on accelerating growth, steering toward profitability, and establishing a durable competitive edge. Investors are watching closely to see if BigBear.ai can finally achieve leadership stability. Without it, competing with industry giants will remain an uphill battle. Comparing BigBear.ai to Palantir highlights stark differences in scale, maturity, and strategic positioning within the AI industry. These two companies, while both operating in the data analytics and artificial intelligence space, are at very different stages of their corporate journeys. Palantir is a seasoned giant with diversified revenue, entrenched platforms, and a track record of sustained profitability. Its global presence and established client relationships have allowed it to weather market fluctuations and continue expanding its reach. Its Gotham and Foundry platforms are deeply integrated into client operations, creating a sticky ecosystem and strong competitive moat. These platforms are not just tools, they become mission-critical infrastructure for governments and enterprises alike. Palantir's direct sales model targets large long-term contracts, often with government agencies and Fortune 500 companies, while BigBear.ai relies on a handful of key government deals, making its revenue base less stable and more concentrated. Financially, Palantir boasts a strong balance sheet and no debt, giving it flexibility and resilience to invest in innovation, pursue new markets, and withstand economic downturns. In contrast, BigBear.ai, with ongoing losses and less cash on hand, is more vulnerable to setbacks and market volatility. Its limited resources mean it must be strategic and efficient in its growth efforts. To compete, BigBear.ai must build a scalable sales engine, diversify its client base beyond government contracts, and develop products that can attract a broader range of customers. The gap between the two is vast. Palantir plays from a position of strength, leveraging its experience and resources, while BigBear.ai is still proving itself and fighting to gain a foothold in a highly competitive market. The challenge for BigBear.ai is not just technological, but also operational and financial. It must overcome internal hurdles, manage cash flow, and execute flawlessly to survive and thrive. The question remains, can BigBear.ai close the gap and emerge as a true contender, or will it remain a distant challenger in the shadow of Palantir's dominance? For BigBear.ai to become a true AI leader, it must execute a disciplined growth strategy. Accelerating revenue growth is critical. Now is the time to win new contracts and expand into commercial markets. Strategic partnerships like the one with Palantir can open doors and boost credibility. Building a robust partner network will help BigBear.ai compete for larger deals. Leadership stability is non-negotiable. CEO Mandy Long must articulate and deliver a clear vision. The company also needs a credible path to profitability, managing costs, and improving margins as it scales. Investors want to see real progress, positive cash flow, and consistent growth milestones. Without financial discipline and execution, BigBear.ai risks remaining a speculative play. BigBear.ai stands out as a company with real promise in the rapidly evolving world of artificial intelligence and data analytics. However, the risks associated with investing in it are significant and should not be underestimated. The company is at a crossroads, with both exciting opportunities and daunting challenges ahead. Overtaking industry giant Palantir in the near future is highly unlikely. The gap in scale, resources, and operational maturity between the two companies is simply too wide at this stage. Palantir's established presence and deep client relationships give it a clear advantage. Still, BigBear.ai has the potential to carve out a profitable niche for itself, especially if it can accelerate its growth trajectory and diversify its business offerings. By focusing on innovation and targeting underserved markets, it could find its own path to success. Its advanced technology and partnership with Palantir are strong endorsements of its capabilities. However, slow revenue growth and recent leadership instability raise important questions about its ability to execute on its vision and deliver consistent results. The company's ongoing lack of profitability and weaker financials make it a risky bet, especially at current valuations. Investors should be cautious, as the path to sustainable earnings remains uncertain and could take longer than expected. For most investors, patience is wise. Waiting for clear evidence of sustained growth, stable leadership, and meaningful progress toward profitability is the prudent approach. Jumping in too early could expose you to unnecessary risk. BigBear.ai could eventually grow into its current valuation, but it still has much to prove before it can be considered a safe investment. The company's future will depend on its ability to execute and adapt in a competitive landscape. For now, BigBear.ai represents a classic high-risk, high-reward story, a promising contender with potential, but also a long and uncertain road ahead that will test both its strategy and resilience. The prudent move is to watch and wait for real, tangible progress before making any big investment decisions. Careful observation and patience could make all the difference.